Adam, your business deals with a lot of small businesses, deals with a lot of fledgling companies looking to sort of make their mark on the world here. When you hear from some of the entrepreneurs and other business leaders that you're dealing with, what type of assistance have they gotten so far from the federal government, if any at all?
Well, first of all, thanks so much for having me. I really appreciate the opportunity to speak about this critical logjam that's really threatening the health of the American economy. Maybe I can give a little background on kind of how I got here to the world of small business. So, early in my career, I founded a small business called General Assembly, where, among other things, I led capital raising efforts, including accessing the credit markets. And after that business was sold, having seen firsthand some of the real inefficiencies around small business lending, I launched a platform that you just mentioned in 2018 to focus on small business lending. And since launching, we've lent to dozens of small businesses. About 10% of those businesses have received funding, the rest have not. And, having had a seat at both sides of the table as a borrower and a lender, it's clear to me exactly why these critical relief funds are not getting to small businesses that really vitally need them.
Okay, so Adam, the solution you're proposing here then is to help out the smaller banks, the community banks, the regional banks that are really in charge of dispersing a lot of the funds to the actual small business customers. Give us a little bit of color first on how you see that proceeding, how it's actually happening on the ground, because the technology is not standard across all the different community banks and regional banks, is it?
That's exactly right. So let me put the current situation in a macro perspective. So last year, the SBA guaranteed $25 billion worth of loans, and the top 100 lenders accounted for about half that volume. In the last 2 weeks, the last numbers I've seen, the SBA has guaranteed $290 billion worth of loans, which is up $50 billion since Monday across about 5,000 lenders. And, while those numbers are staggering, what's alarming is that only a very small fraction of that amount has made it to the end user for the exact reasons that you mentioned, Scarlett, which is that there's this huge logjam. And the reason for the logjam, kind of like many issues in this pandemic, is a logistical issue, which is basically that when these small businesses reach out to banks, they have to send a PDF, they have to sign a DocuSign, they're emailing a zip file. The bank receives that zip file and manually validates the info. If there's a problem or a discrepancy, the bank has to call the borrower. Once the loan is settled, the bank manually enters the information into the SBA system. Once the SBA approves, they alert the bank, and then the bank manually emails the borrower a promissory note. And so, what you just heard me referring to is PDFs, zip files, emails, phone calls, as really the core methods of communication at a time that half of America can't physically leave their home to go to work or a bank.
So, Adam, is this an issue then mostly of technological limitations, or is this more an issue of the regulations that SBA and the federal government requires in order to get this done, and how can either of those be rectified?
Well, I think what we're focused on is the technology issue. It's in part a regulatory issue, but in a very large part, it's actually the logistics of getting all of this money to the small businesses. So that's why today we're announcing the launch of Assembled Financial, which you can find at assembledfinancial.com. And we're working directly with the SBA, and we're in the process of actually embedding elite software developers, who work at the Department of Defense, at Apple, at Goldman Sachs, into a variety of these financial institutions. And we're working to help make their existing systems as seamless and efficient as, an iPhone in your pocket, and really help them upgrade that tech backbone using, automation, cloud computing, and machine learning. And that's really just a critical need right now, that banks adopt these new technologies.
So, Adam, what you're proposing here is to improve and build upon the current system, perhaps make it more efficient, not necessarily replace it wholesale. Give us a sense of the timeline here in terms of the solution that you're proposing. Is this a platform that is just going to be in place for the duration of the small business loan program, from the application process through the actual money being paid out, or is this something you envision to last longer? And if it's the latter, what value do you add going forward?
Sure. I think the immediate need is the PPP program, and for us, that's really a civic duty, and there's really not very much time until businesses run out of cash. So we're 4 to 5 weeks in. A typical small business has about 6 to 8 weeks of cash, to give you a sense of where we are. I think beyond that immediate need of getting critical funding to small businesses, there's also an opportunity to vastly improve integrations between banks and thousands of tech and consumer companies who are looking to launch their own financial services. And so, this really is a bank's opportunity to win or lose these customers. I mean, they've really got an opportunity now to bring technology in, to bring third parties in, and to really help open up their systems to get money out both to small businesses and to individuals using technology.
So, Adam, I'm curious about the money that is going to potentially eventually get into the hands of these companies. Is this money primarily going to be used kind of as a stopgap to deal with whatever short-term payroll issues and other funding issues they might have? Or is there a chance for them to actually use this money to sort of, jumpstart their businesses once the economy sort of fully reopens and we start to get more consumer activity out there in the space?
Well, I think the answer to that question is both. These businesses are risking being permanently shuttered. We're talking about 50% of the restaurants in the United States going permanently out of business. And so really, these are emergency funds for payroll, but also for inventory, for generally running the business, for helping it open back up. And it's just an immediate